The Euro-USD pair is teetering on a tightrope between cautious optimism and lurking uncertainty. At 1.1700 as of Thursday's session, this major forex pairing has clawed its way to a 3-week high, but the path forward is anything but clear. Let's unpack the forces at play and why this moment could define the pair's next move. But here's where it gets controversial. Is the market overestimating the Federal Reserve's willingness to cut rates? Or is the euro's strength a sign of deeper structural shifts? Let's dive in. The big picture, neutral with a sneaky upward slant. While the Euro-USD isn't screaming bullish or bearish, it's leaning slightly higher. Key support levels today sit at 1.1650, 1.1580, and 1.150, while resistance is testing at 1.1740, 1.1810, and 1.1880. Traders are advised to consider buying near the 1.1620 support with a target of 1.1800 and a stop loss at 1.1570. Conversely, selling from the 1.1785 resistance level could target 1.150 with a stop loss at 1.1860. These levels aren't just numbers, they're psychological battlegrounds where sentiment and strategy collide. What's driving the euro's climb? The euro's recent gains against the dollar are no accident. The US dollar has weakened to its lowest since late July, fueled by expectations of a Fed rate cut in September. July's inflation data, which showed a 0.20% monthly rise in headline CPI, annual rate 2.7%, has traders pricing in 61 basis points of cuts in 2025 and 65 in 2026. Meanwhile, the European Central Bank, ECB, has paused its rate-cutting cycle, leaving borrowing costs at their lowest since November 2022. This creates a widening interest rate gap, giving the euro a tailwind. But here's the twist. Some analysts still whisper about a final ECB cut before year-end. Could that shift the balance again? The market will be watching closely. Technical signals, a tale of two scenarios. On the daily chart, the Euro-USD is at a crossroads. A breakout above 1.1800 could ignite a bullish rally toward the 1.2000 psychological level, especially if the RSI, Relative Strength Index, stays above 56 and the MACD, Moving Average Convergence Divergence, hints at a green light. This scenario would gain momentum if the Russia-Ukraine conflict eases and US-EU trade tensions cool. Conversely, a drop below 1.1630 support could trigger a bearish slide toward 1.1550 and 1.1480, erasing recent gains. The question is, which force, optimism or caution, will dominate this week? Geopolitical and economic headwinds. The Eurozone isn't sailing smoothly. The EU faces 15% tariffs on U.S. exports, and geopolitical tensions remain a wild card. European and Ukrainian leaders are set to meet with President Trump before his summit with Putin, a meeting that could either calm or inflame markets. Meanwhile, Eurozone GDP grew a modest 0.1% in Q2, and inflation stuck at 2% in July. These numbers suggest a fragile recovery, but not one that's crumbling yet. Why the recent rally? Forex experts point to the Fed's dovish pivot as the main catalyst. Traders are now betting on a 50 basis point rate cut in September, a move that would make the dollar less attractive. The ECB's pause in rate cuts amplifies this effect, creating a favorable environment for the euro. However, core inflation in the U.S. rose to 3.1% annually, driven by a 4.0% spike in airline fares. Economists argue this is a one-off anomaly, but could it be a canary in the coal mine for broader inflation risks? The market's answer will shape the pair's trajectory. Trading tips for the week ahead. For traders, the EUR-USD offers both opportunities and risks. Monitor the 1.1700 level closely. It's a magnet for volatility. Use the RSI and MACD indicators to time entries. And don't ignore geopolitical headlines. If you're new to Forex, consider testing strategies on a demo account before risking real capital. After all, Even the most solid analysis can't predict a black swan event. Final thought. What's your take? Is the market underestimating the Fed's resolve to cut rates? Or is the euro strength a temporary illusion? Could the ECB's pause be a strategic move to stabilize the eurozone? Share your thoughts in the comments. Let's debate whether this is a golden opportunity or a ticking time bomb for Euro USD traders.